Oh my, what is going on? Hear me out. Coinbase and MasterCard are making serious moves again. A new partnership and a fresh acquisition just dropped, and it could reshape the way digital payments and crypto transactions work together. And get this, Coinbase CEO just mentioned Ripple in a way that caught everyone's attention. People are already connecting dots and wondering what might be coming next. At the same time, politics might once again play a major role in the crypto market pump that everyone's been waiting for. We are talking regulation debates, election noise, and how global decisions could shift investor confidence overnight. And of course, influencers across social media keep saying the market is entering what they call the banana zone. Some even said they would delete their entire accounts if certain numbers don't hit by the end of the year. Sounds wild, right? Let's talk about what's really happening. The crypto world right now is buzzing with updates that could either trigger the next big rally or slow things down just long enough to frustrate everyone. Coinbase partnering with MasterCard is not a small headline. It's a move that connects one of the largest crypto exchanges with one of the most powerful financial networks on Earth. When big players like this team up, it usually means one thing: they see a massive opportunity on the horizon. MasterCard has been exploring blockchain technology for years, but this time they seem ready to take a more aggressive approach. By partnering with Coinbase, they are setting the stage for a future where crypto payments are just as easy as using your regular debit card. Now, here's where it gets more interesting. Coinbase is also in talks to acquire a stablecoin startup called BVNK for around $2 billion. Why is this such a big deal? Because stablecoins are becoming the real backbone of global crypto finance. They act as a bridge between traditional money and digital assets. With stablecoins, people can move money instantly across borders without the delays or fees that come with banks. If Coinbase takes control of BVNK, it would give them a huge slice of that stablecoin market, which could become one of the most profitable areas in all of crypto. At the same time, Brian Armstrong, the CEO of Coinbase, recently made a statement that got people talking. He said that the internet gave everyone a voice, and crypto will give everyone fair access to money and financial systems. That kind of vision goes beyond just running an exchange. It's about building the rails for a new kind of economy, one that doesn't care where you live or who you are. And here's where the connection to Ripple comes in. Ripple has been pushing for cross-border payment systems for years, arguing that money should move as easily as information does online. So when Armstrong mentioned borders mattering less and value moving at digital speed, it sounded like a quiet nod toward Ripple's entire mission. Maybe it's a coincidence, or maybe Coinbase and Ripple could be preparing to work together in some capacity. We will have to wait and see, but speculation is already running wild. Meanwhile, the market itself is in a strange but familiar place. Bitcoin is holding steady around $120,000. Some say it's just catching its breath before another leg up, while others fear a short-term pullback. XRP is sitting near $2.80, showing small daily gains but still fighting resistance levels. What's notable is that many traders and influencers on social media are predicting a massive breakout by the end of the month. You've got people like Carl Moon saying the shakeout is over and that a legendary pump is about to begin. We have all seen these claims before, but every so often one of them actually lands. The crypto space has a funny way of proving everyone wrong and right at the same time. Now, politics. This part is messy but important. Behind the scenes, there's a tug-of-war going on in Washington. A leaked proposal about decentralized finance regulations has triggered new arguments between Senate Democrats and Republicans. This back and forth is delaying broader market structure discussions, which could push formal decisions even further down the line. And with election season heating up, politicians are using crypto as part of their talking points again. Some are calling for tighter regulation to protect consumers, while others argue that too much control could stifle innovation and drive capital overseas. For the market, this uncertainty creates hesitation. Investors hate not knowing what rules will apply next year, and that hesitation often translates into volatility. Still, there's a silver lining. When institutions like MasterCard and Coinbase move forward regardless of politics, it signals long-term confidence. They know that once the dust settles, the companies that are already building real infrastructure will dominate. Visa, MasterCard, and other payment giants don't want to miss the shift to digital assets. If stablecoin payments become mainstream, they want to be right in the middle of it, not playing catch-up. That's why these partnerships matter. They're not just press releases. They are early moves in a much larger financial transition. Now, let's talk about how this affects traders and investors. Many people are opening leveraged positions again, hoping to catch the next rally. Leverage can multiply gains, but it can also wipe out accounts in seconds. Some platforms are offering huge bonuses for new users, promising rewards for deposits or trading activity. Those promotions might look tempting, but they come with serious risk. Leverage is a double-edged sword. Even professional traders lose when the market swings fast. Responsible trading is the only way to survive in the long run. It's easy to get caught up in the excitement when everyone online is shouting about 100x profits, but remember that losses can multiply just as quickly. The emotional side of crypto is powerful. When markets move fast, social media becomes a mix of hope, fear, and FOMO. Influencers start posting rocket emojis, YouTube titles scream that the bull run has started, and new investors rush in without a plan. Then, when prices dip, panic sets in. This cycle happens over and over, and understanding it is part of being a smart investor. Every serious crypto trader knows that patience beats hype every time. The real winners are the ones who keep learning, keep adjusting, and avoid emotional trades. Back to the news flow, there's been talk about FUD spreading again. That's fear, uncertainty, and doubt. A few false rumors about exchanges and listings caused temporary sell-offs this week. One claim said that a major platform would delist several coins, but it turned out to be untrue. Unfortunately, by the time the correction came out, the market had already reacted. This is the dark side of how information travels in crypto. A single tweet can cause billions of dollars in liquidations. That's why fact-checking and following credible sources is so important. The internet moves fast, but truth often moves slower. CZ, the former CEO of Binance, also made headlines recently. Despite stepping back from leadership, he remains one of the wealthiest people in crypto. He commented on the recent sell-off, saying it likely started from misinformation about token listings. He reminded people that when headlines say a big company sold Bitcoin, it's often just their users rebalancing holdings. It's not always the company itself making those trades. Understanding these mechanics helps investors avoid emotional reactions to misleading news. Speaking of global movement, Ripple just announced a partnership in Bahrain, expanding its influence in the Middle East. That region is becoming a major player in the crypto and fintech space. Regulatory clarity there has allowed faster adoption, and companies are taking notice. This connects back to the bigger story. The world is not waiting for one country to decide what crypto will become. Innovation is happening everywhere, and companies that keep building despite uncertainty are the ones shaping the next financial era. Now let's look at the overall sentiment. Even though views and engagement might be lower across platforms, that's not necessarily a bad sign. Historically, quiet periods often happen before big market shifts. When everyone stops paying attention, accumulation happens quietly. Then, when the momentum returns, the crowd rushes back in. If you have been in crypto for a while, you know that patience during low attention cycles can pay off more than chasing hype when everyone is excited. So, what should we take away from all this? The first thing is that crypto continues to mature. Partnerships between major financial institutions and blockchain companies show that digital assets are not going away. Governments might delay decisions, influencers might argue, and rumors might spread, but the core technology keeps moving forward. The second thing is that knowledge and discipline matter more than ever. Doing your own research, protecting your assets, and avoiding scams should be second nature by now. If someone messages you pretending to be from a channel, asking for money or sign-up links, report them immediately. Stay cautious and stay informed. And finally, perspective. Markets move in cycles, and every correction, every sideways week, is part of a bigger story. The financial system is slowly evolving, and you are early enough to watch it unfold. Whether Bitcoin hits 200,000 this year or not doesn't change the long-term direction of where things are headed. The combination of blockchain innovation, institutional adoption, and public awareness is reshaping money itself. As we head into the rest of October, keep an eye on the bigger picture. The partnership between Coinbase and MasterCard, the speculation around Ripple, and the political tug-of-war are all part of the same transformation. The world is learning how to handle digital finance at scale, and every headline is another step in that journey. There will be ups and downs, but progress is clear. If you found value in understanding what's happening behind the scenes, remember to stay curious, stay steady, and keep your clarity in this space. Because in crypto, clarity is everything. Thank you for spending your time here today, and until next time, stay focused, stay informed, and stay ready for what's next.